Welcome to the Third Decade Podcast, where we believe every young adult deserves the confidence to take control of their financial future. Whether you're just getting started or you're well on your way towards financial independence, we're here to give you the tools and guidance you need to build a life that aligns with your dreams. Let's turn financial uncertainty into opportunity together.
Hey Third Decade community, I'm your host Nikita Wolf, and today I am joined by one of Third Decade's beloved volunteer financial mentors, Adam Van Deusen. Thanks for coming onto the episode with us today, Adam.
Thanks so much for having me, Nikita.
I would love if you would introduce a little bit more about your professional background, and then we'll get into what our topic is today.
Oh, sure. I'm a CFP and a financial advisor by day. I produce a lot of work for a company that produces educational content for financial advisors, and love being a volunteer financial mentor with Third Decade, and do some volunteer work and teaching financial empowerment classes with some other nonprofits as well.
Great. Well, thank you again for joining us. Today's episode, we're going to be talking about credit scores, how to achieve the perfect credit score, if you can achieve a perfect credit score, and all of things credit health, I'll say. So let's go ahead and dive in. I guess let's talk about why a perfect credit score or a very good credit score matters.
Yeah, some people will say, well, I'm not, buying a house, or I might not be buying a car in the future. Well, why does a credit score matter to me? But, it turns out it can impact a lot of different facets of your life. Primarily, it is what's going to be used to determine your eligibility for credit, which could be anything from a mortgage, a home loan, to a car loan, to getting credit cards, other types of loan products as well. So because the banks want to know, well, are you likely going to be able to repay the loan that we give you? So the credit score, along with your income and other information, will help them determine that. But it turns out that an increasing number of businesses use your credit score as well. So one of the well-known ones is that car insurance companies seem to have found that people with higher credit scores are lower risks for accidents. So people with higher credit scores can often pay less for their car insurance premiums. So it can go from that to various other providers. So even if you're not thinking about getting a loan in the very near future, it's possible you might want to use it in the future, or having a good credit score could benefit you through your purchases from other businesses.
I always wondered why car insurance rates were impacted by credit health. I had no idea it's because there was actually a correlation to that. That is fascinating. So
evidently, that's what they found. That's what evidently.
Yeah, interesting. So I guess maybe we'll start before even getting to the point of like how to get a great score. What about for somebody who logs in to check their credit score and it just says like doesn't exist? What should they do? What are their options to start building their credit?
Yeah. So, maybe you are just graduated from high school, you're a younger person, or maybe you're new to the country and you're an adult and haven't had much experience with it. So a good way to start is to, as you said, start building your credit history. And we'll get into what goes into a credit score. But one part of it is the age of credit. So by getting started and then handling that credit responsibly, you're showing the companies that create the credit scores, but as well as lenders and others, that you're responsible. So depending on your income and your situation, you may apply and may be approved for what you might call a regular credit card, where a bank will give you a credit card up to a certain limit. So they might give you a credit card with a $3,000 limit, which means you can spend up to $3,000 on it. Not that you necessarily should, and actually spending much lower than the limit is beneficial for your credit score, but that's how it works. And then each month you'll receive a statement. Hopefully you pay it off in full every month. That counts as a successful payment for your credit score. And over time, your credit score will increase. Sometimes, though, if you don't have a lot of experience with credit, you may have to apply for what's called a secured credit card. So this is where oftentimes you can get it from the bank, where you might have your checking and savings account. The way this works is that you'll give the bank a deposit, maybe $250, $500. You give them the deposit, and then they'll issue you a credit card with that limit. So their risk is lowered because they have your money in case you don't pay it back. But otherwise, you treat it just like a regular credit card. You spend during the month, you get a statement, you pay it off in full. And while there's no set time, usually after, so it could be 6 months, could be a year, could be longer, of making those on-time payments, showing that you can handle having that credit, you can talk to the bank to have them then hopefully convert that secured credit card into what you might call the regular credit card, and then you'll receive your deposit back. So that can be a really good way to get started if you don't have much credit history and don't qualify for the regular credit card.
Yeah. Now, are there other ways somebody might have a credit score even if they don't have a credit card? Like, yeah, I guess somebody who maybe they're 28 years old and they've been renters their whole life. They haven't needed to finance anything. What might build their credit score up to that point?
Yeah, so there's a few things. So any loan product that you've had, if you've had student loans in the past, the payments on those count to your credit. Of course, if you've had a car loan or a home loan, those will count as well. But increasingly, there's movement to have more types of bills support your credit. So, for example, when you pay rent every month, that's a bill that you owe and can be fairly steep depending on where you live. So, your ability to pay your rent or your utilities every month can be a way to show that you are reliable and can make those payments. So, nowadays you can talk to a landlord and see if they'll report your on-time rent payments to the credit reporting bureaus. That can be one way to start to build up your credit. Now, they may or may not, but I think in the coming years, I think we're going to see growing recognition that there's a lot of ways to show your credit worthiness besides either having a loan or having a credit card itself.
Yeah. So the way that our classes talk about it, for those who are maybe new to the realm of, what is a credit score? Why do we have it? One of the questions we ask our students while they're learning with us is, how do you make decisions on which products to buy? And it might sound sort of, messed up to compare us to like a product, or a service or restaurant, but a lot of us will use online ratings to decide who we will, what restaurants we'll frequent, what stores we trust, businesses will support, all of that. So we can see what other people's experience with them has been. And essentially, a credit score is almost a way for that same reputation to be attached to a person, so that a bank can determine whether you're going to be somebody who pays them back or if they're going to take a financial loss by lending you money. So how else would you describe what a credit score is if we're starting real basic level?
Yeah, I mean, think about if you were going to lend money to a friend, right? You're kind of acting as the bank, right? So if I'm going to lend money to my friend, I want to know, well, is the friend going to pay me back? So putting yourself in the bank's position is, you might say, well, do they have they paid me back in the past when I've lent them money? That's why the biggest part of your credit score is, do you make your payments on time each month? Will they pay you back? Does your friend owe money to other people, right? Because if they owe money to 3 other friends, well, then it might be less likely that they're going to pay you back. And so that goes into your credit score as well. They want to see your total balances and how much you owe, because if you're very stretched credit-wise, you've maxed out all your credit cards, well, then it might be less likely you're going to be able to pay off your next one. So I think putting yourself in the position of the bank can be a good way to see it. And I would note here too, your credit score can really seem like a judgment sometimes. And so I always encourage folks to take a step back. This is not a judgment of your character in any way. It's just a representation of your experience dealing with credit. And maybe we'll talk about this later, but one of the nice things on your credit is basically nothing is permanent. Even if you've made mistakes in the past, your things that are marks on your credit score will tend to fall off over time, depending on what it was over a certain number of years. So, definitely want people to think that it's to emphasize that how you handle credit today and beyond can make a really positive difference on your credit score and your finances writ large.
Yeah. So let's talk about the credit range you might see. I know some people coming into our program ask if, you start with a 0 credit score and you build up from there. I'm not sure why FICO has decided that the score starts at a base of 300 and goes up to 850, but let's talk about maybe the range, maybe what behaviors would fall towards one end of the range versus the other. Is it possible to get to 850? If so, how long? All of that.
Yeah. So I think the first thing to realize is, so if you're just getting started with credit, so unfortunately, it's not that though you start with a perfect score and only go down if you have a negative mark on your credit. So if you don't have any credit, you're probably going to start with a fairly low score. But it's something that you're going to be able to increase slowly but surely over time as you responsibly handle credit. And we'll get into the key ways to do it in that way. So the key thing here is that it's, some people might have the goal of a perfect 850 credit score, but it would be extremely hard, if not impossible, to do. It's more important to be to sort of understand the different ranges of credit scores. So, the difference between having a score that's 830 versus 831 is not going to make a big difference in terms of when you're applying for a loan. But the difference between an 830 credit score and a 730 credit score or a 630 credit score, now we're getting into a big difference, as that could mean the difference between being approved for a loan and especially the interest rate that you'll have to pay on it. Typically, the higher your score, the less risky the bank sees you, and therefore you can pay a lower interest rate because they're taking less risk on giving you the loan. So, in general, there's no sort of hard and fast lines. If you're looking at a max 850 credit score, if you're above 800, you're doing really well. 750 to 800, you're doing pretty well. See if you can get up into that 800 range, maybe, and so on and so on down from there. So it's much more of where you are on the spectrum as it is, debating every single little individual point. And your credit score is going to change, by 1 or 2 points. So I wouldn't sweat that as much as knowing where you are writ large.
Yeah, and I think I might also point out that you might have perfect credit behavior. You might always pay on time. It takes a very long time to have an 800 plus credit score. I think it took me about 10 years, and now I'm like terrified of falling back below it. But I would say so you had mentioned that you'll start with a fairly low credit score. We're not talking I don't think you come into the credit score realm with like a 300. What I've seen of people with like very minimal credit and like new to it is more of like a neutral score in the 700s range. Would you agree with that, Adam? Does that sound about right?
Yeah. I mean, you might have more experience of that than me, but I mean, I think in general, and I should note too, so there's your credit score, which is the number, but banks will, I think, potentially also look at your credit report, which shows, all the accounts that you've had. So even if your credit score is higher, they might be a little bit wary if you've never had experience with credit before.
Yes, definitely. So all of that tangent for me to say, you might have the goal of an 800 or an 850 credit score, and it might feel very frustrating at times if you've been sitting at like a solid 760. I feel like that's the number I see students kind of feeling stuck at, in that like 760 to 780 range, even with really good credit behaviors. And it just takes time. Keep doing what you're doing. Sometimes if you're spending a lot, like you're putting all your bills on it, one of the things that I see as a useful tool is having it auto pay that hits twice a month rather than just once, so that it keeps your utilization rate really low, which we'll go over. That's one of the slices of the pie that makes up a good credit score. Those are just a side note for people who are maybe a little perfectionists about their credit score.
Yeah.
So let's go ahead and talk about the different factors that influence a credit score. We have payment history, makes up about 35% of it. The actual utilization, and actually I'll back up. The payment history is that you are always paying on time. You're never missing a payment, and paying off in full, ideally. Credit utilization is like the total amount that you have been given from the bank. Let's say, like you said earlier, Adam, $3,000 limit. Maybe you're new to credit. You want to be using less than, remind me the percent. It's like less than 10% of that, ideally.
You really should be below 30%.
Okay.
You don't want to be much higher. So, but the lower you go is fine. Like if you're below 10, that's going to be even better.
Yeah. And 30% is more realistic to aim for. I will say, as another little side note, if you are feeling like, it's like almost impossible for me to keep a super low utilization rate, one of the tools you can use after you've been with a card company for a long time is to call and say, hey, I've been a good card owner. This is my income right now. Can you increase my line of credit? Again, using that very responsibly. We're not going to do that if we are like already in debt and it's just rolling up and up and up. We don't want to get stuck in a debt cycle, but that is a way to let's say you spend $1,000 a month on that credit card, that's going to be a smaller percentage if that increases to $5,000 for your credit limit rather than $3,000 for your credit limit. So the credit utilization makes up 30% of that slice of the pie. Then we have the length of credit history. Could you talk a little bit about what we mean by the length of credit history, Adam?
Yeah, so there's two pieces that go into this. So one piece is the age of your oldest credit account. So maybe you opened up a credit card, after you graduated high school. Since you're 18, it's been 10 years, let's say. That might be your oldest account still. So oftentimes, if you can keep that account open, hopefully maybe it's a no annual fee credit card or something like that. That will sort of be an anchor as your oldest credit. So you've shown you've now had credit for 10 years, and 10 years from now, you'll have 20 years of credit.
Right.
The other factor that they're looking at as well is the average age of your credit. So for example, if let's say you have just that one card you opened 10 years ago, your average age is going to be 10 years. But let's say I have that one 10 years ago and I opened 3 cards this year. Now I have 4 cards over 10 years. Now my average age is going to be much shorter. So the older your oldest account is, and the higher the average age of your credit is, the better, because the banks want to see that, like, hey, have you been able to handle credit responsibly over time?
Yeah, absolutely. Yeah, so that length of credit history alone makes up another 15% of that little pie that FICO uses to determine your credit scores. Then after that, we have 10% of the score is based on your credit mix. What do they mean by credit mix?
Yeah, so this is the types of credit you've accessed. So, for example, credit cards is sort of what we might call revolving debt. So the amount is going to vary depending on how much you're charging on the card, and then hopefully you're paying it off in full every month. But then you might have what are called installment loans, like a car loan, for example. With that, you're going to be paying a fixed amount every month. Maybe your car payment is $300. You might have student loans. You might have home loans, other types of loan products like that. So they're looking to see, have you been able to handle these type of products over time? Though, as you noted, this is only 10% of your credit score. So, sometimes people ask, well, should I can afford to pay for my car in cash? Should I get a car loan to improve my credit score? And in that case, this is only 10%. It's not necessarily the dividing line. Now, maybe you do want to get a loan. Maybe you get a really good interest rate or something like that. But it's not necessary. It's not necessary to go into debt to have a good credit score.
Yeah, definitely. Yeah, all of that, what we talk about, we want to make sure that any efforts you make to improve your credit or gamify credit or whatever, it never comes at the expense of money that you would otherwise be saving or not spending. We want to use we want to strategize with spending that we are already going to do and not incur any sort of additional fee by trying to gamify it. So. Right. Lastly, the new credit inquiries also makes up 10%. And that's the final slice of the pie. Could we talk about what new credit inquiries we're referencing here?
Sure. So there are 2 kinds of inquiries. And by inquiry, we mean people who are not you, who are checking your credit report and score. So for example, there are 2 types of inquiries, what you call hard inquiries and soft inquiries. So a hard inquiry is when you initiate the request to, for example, a bank. Let's say you're applying for a car loan. You say, okay, I want to apply for a car loan. And so the bank is going to check your credit score. So you're authorizing them to do that. So when that happens, that puts a little bit of a ding in your credit score. Again, this is only 10% of your total score. So it's a little bit of a ding on it. The other type of inquiry is what's called a soft inquiry. So this is where, without you giving them permission, banks and other financing companies check your credit report and score to see if they want to usually advertise to you. So, when you get a credit card offer in the mail, often that's because the bank has, cast this wide net, tell me all these people who have a certain credit score and we want to advertise them. So those soft inquiries do not impact your credit score. So you don't have to worry about, when you're getting all this mail, that it's going to be decreasing your credit score. In addition, when you're checking your own credit report and your own credit score just for your own purposes, that also does not count as a negative. So you don't have to worry about checking that. One other thing I would note on the hard inquiries is that if you're shopping around for a loan, so it could be a good practice, for example, if let's say you're buying a car, you get a quote for a loan from the dealer itself, but maybe you go to a bank or your credit union and check to see if there's a better rate there. All inquiries for the same type of credit inquiry within a 30-day period are combined into one. So you don't have to worry about, so yeah, you'll have one hard inquiry for your credit score, but you don't have to worry about shopping around, having that decrease your credit score. So, because typically that can often save you a lot of money if you can find a lower rate. So that's important to think about as well.
That is a great distinction to make. So
Sorry.
Yeah,
the one point I make, now that we hit the end here is, we talked about the percentages, but basically 65% of your credit is based on making your payments on time every month and keeping a low balance compared to the credit that's available to you. So, there's people often talk about these magic ways to, lift your credit or this will boost it or whatever. But by far, the vast majority of your credit is just making those payments on time and keeping a low balance. So if you're really focusing on boosting your credit, that's really the first thing to look at.
So let's say we have somebody who's like a perfectionist. They are ready to achieve the perfect credit score. What are the different things that they can do to basically just get the best score that they possibly can?
Yeah, as we mentioned, it takes time over time. You're going to be, having the credit that you have, making the payments on that over time, on time, preferably in full every month. The next thing is, if let's say you only have one credit card, maybe opening a second credit card, that will help increase the total amount of credit and lower your utilization rate. Again, it'll be a little bit of a ding up front from the hard pull, but that increased utilization can benefit you over time. I would say that we mentioned before, if you have maybe a landlord who can report your on-time payments to the credit bureaus, that can be a potential help there. So I think I don't think there's really like a magic secret here. It's using credit responsibly over time, will show the banks that you're potentially a responsible person to lend to. Do you have any favorite tips in this world, Nikita?
I think that the things I've used for myself to achieve, as high of a score as I can, because I've just given up on the dream of 850. I've decided if I'm going to reach it eventually, it's going to be when I'm like 65 and it doesn't matter anymore. But I have just really focused on paying on time and occasionally making an extra payment in the middle of the month. One of the cards that I got was one of the premium cards, had a really high credit limit, which ended up really positively impacting my utilization rate because I'm never spending anywhere close to that amount. Not closing, I have a card that is no annual fee that I just don't love, but it catches a couple of my bills each month, so it stays active and low utilization as well, but keeping that open so that it doesn't impact my credit length and the average age of my credit cards. And I guess just naturally, as I've progressed through adulthood, I have I've gathered a few different types of credit, buying a house and installing solar on it and stuff like that. So I think I've almost stumbled into some of the things naturally as I progressed through life. And maybe that's a good point to make, is we're not expecting an 18-year-old to come into the world and like have every single thing right. But like you said, 65% of it is just making your payments on time and keeping a low utilization rate of that card. So those are what I've used for myself.
One other thing I would recommend actually to do is make sure you check your credit report regularly. So the credit report itself is your lifetime record of your use of credit. And so you can check it for free, annualcreditreport.com. That's the website. You can check it for free, no strings attached, nothing to purchase or anything like that. But it's good to check it every now and then. I would say at least once a year, but to make sure it's accurate, because that'll have a record of all of your credit accounts, as well as all of the payments that you've made over time. So, for example, if there's a credit card account on there that you don't recognize, like it says you have a Chase credit card and you've never had a Chase credit card, you can file a dispute with the credit reporting bureaus, because that's going to affect your credit score, and someone might have stolen your identity and opened a card in your name. So a big thing that you can do, you can play sort of offense with your credit by, paying your bills on time and being responsible with credit, but you can also play defense by avoiding and making sure there's no fraudulent activity on your credit report that could bring down your score as well.
Yeah, 100%. And the place to check your credit,
to
check your credit report, like my brain just went blank for a second, is annualcreditreport.com.
Yeah.
Make sure not to accidentally stumble into one of the imposter sites.
Yes.
If somebody wants to check their credit score, there's lots of ways to get estimates. And then there's FICO.com where you can pay for the score. When would you recommend, Adam, that somebody actually goes and pays for their 100% accurate credit score? Does it really matter, or are the estimates that we get through our banks enough?
Yeah. And so you mentioned that with banks, oftentimes when you have a credit card, they'll offer you a free credit score. Now, there are a couple of different companies that create credit scores. FICO is the most well-known, but there are others as well. So, the range will vary. I think if you're just in your, sort of day-to-day life, just checking it every now and then on your credit card company, if it's offered, could be a good way to do it. Now, if you're about to buy a house and you really want to know where you're at, maybe getting that hard FICO score might be good as well. The other one I would mention too is that there are various sites that'll offer you often an estimate of your credit. Places like Credit Karma, where it's free to access your credit score. The trade-off is they're going to, use your login to help advertise to you. So you might be, facing a lot of advertisements and things for getting that free access to your credit score estimate. But, again, it's one of those things that tracking it day by day, it's going to go up, it's going to go down a little bit. It's checking it every few months, maybe, right? Making sure you're slowly moving up. There was no, massive drops. For example, if you see you think everything's fine, and then you see your score go down by 30 points, all of a sudden, that's where you might need to take action. Check your credit report to see if there's a fraudulent account, or maybe the credit card company didn't report your payment correctly. That's why it's good to check it every now and then. But checking it, every day just, might make you more stressed than the value you get from it.
Agreed. Yeah. And by going to annualcreditreport.com, you basically will be able to see your credit report at the three bureaus, which are Equifax, TransUnion, and Experian. And so some people choose to space that out over the year. I believe maybe post-COVID, they actually now allow you to check it as many times as you want throughout the year. Is that still the case?
Yeah, it used to be once per year per bureau. But now, those have been wiped away. And I think you can check it with each of them as often as possible. Again, unless you've had fraudulent activity on there before that you're checking to see has been removed, you don't need to check it every day necessarily.
No.
But again, I would say at least once a year, checking your report from each of the three bureaus, because the information on it can potentially be different. But if not, every 6 months, or, if you're really aggressive, maybe every quarter or something like that.
Yeah. I know I only check mine like once a year. So we are by no means expecting that you need to do this monthly to keep a good eye on things. You can also sign up for emails. Like I know Experian emails me and lets me know each month if my score has increased or decreased. And I typically peek at it just to know, does it say why? So you can also just keep a loose eye on it in that kind of way.
Yeah.
So let's talk about maybe some of the common myths. I feel like there are certain things that have just been lingering out there that people hear and potentially even cost them money by listening to. So what are some of the common myths that you run into, Adam?
Yeah, I think one of the most common ones is that you need to always maintain a balance and month to month and not pay your bill in full each month in order to get a better credit score. Not quite sure where this came from, but basically the bottom line is probably the most effective way to use a credit card is to spend a little bit on it, a very low percentage compared to the limit available to you. We mentioned less than 10% before perhaps, and then paying it in full on time every month by the due date. That way you're not paying any late fees. You don't have to pay any interest by not paying your balance in full. It counts as a successful payment as well. One thing I would mention in this regard, though, is, some people might say, well, do I just put my credit card in the freezer and never use it? I think you sort of alluded to this before, but if you don't use your credit card for maybe a year or two, the bank might just close it because they're like, well, this person doesn't need it anymore. So it can pay to just, make a purchase on it every now and then, maybe every few months, to make sure it stays active. But again, you make a $10 purchase at the grocery store, you pay it off at the end of the month, you'll be in good shape that way. So again, hopefully you should be able to use credit without actually having to pay any extra money to the credit card companies.
Yeah. Yeah, absolutely. I know another one that we see is people think that applying for multiple cards boosts your score, and it has the potential to have a downside, doesn't it?
Yeah, exactly. We said before, when you apply for a card, you're getting that hard inquiry on it. You're lowering the average age of your credit. Now, again, you're boosting the total amount of credit available to you. So, it goes into their formula, and that's going to go in that way. But again, especially if you have that large loan on the horizon. So for example, if I'm going to apply for a large car loan next year, maybe I'm not going to apply for any additional credit cards this year. So I keep my average age of my credit up. Everything's looking nice and smooth going into that loan application. And then maybe once I have the loan, I apply for another credit card afterwards. So when it comes to applying for credit cards, sometimes it can be tempting. They offer good sign-up bonuses and rewards sometimes, but taking it slowly is often the best course in terms of being able to manage the payments every month and everything else that goes into managing credit cards.
Yeah, definitely. And I know you already touched on this earlier in the episode, but it also comes up often. We have students asking the classes, does checking your own credit score lower it? You've already clarified, no, it does not. So I'll drive that home. It does not hurt your credit to do soft inquiries on your credit. What will affect your credit is if people are doing hard pulls for opening up a new line of credit.
Mm-hmm.
I'll also take a second just to talk about how, there are certain financial philosophies that maybe demonize debt a little bit. Just say, you know what, cut up your credit cards, throw them away. You don't need them. Why might we caution somebody from that approach?
Yeah. And so you might say to yourself, like, I'm not going to need a loan in the future. I'm just not planning it. So there's a couple of things. One is that it's very possible you change your mind later on. If you're going to buy a house, it's very hard to buy a house in cash, especially these days. So it's possible you might need it later on. Again, as we mentioned before, there can be, benefits with other financial service providers of having a higher credit score. But, in general, it's good to know that you can build good credit without having to pay interest. Some people are, like we said with the credit cards, if you're opening a credit card that has no annual fee, you use the credit card to make purchases during the month, you pay it off in full by the statement due date, that's going to count. That's going to start building your credit over time. And I should note as well, using a credit card compared to a debit card comes with extra security because, for example, if you open up your statement the month and you see a purchase on there that you don't recognize, a while back, I had a purchase from Netflix Brazil on one of my credit cards. And I said, well, I haven't been to Brazil lately and haven't purchased Netflix there. So, you call the credit card company, say this is a fraudulent purchase. They can immediately freeze the purchase. So you won't have to, you won't owe that money on your credit card statement. Usually they'll issue you a new credit card because someone might have, compromised your credit card number, and you're fine. Whereas with a debit card, if someone gets your debit card number and makes charges, they could drain out your bank account. And it's possible to get that money back from the bank, but that can be a bit of a process to get that money back. So using a credit card can be a nice way to get that security. Now, again, of course, using it responsibly to where you're going to be able to pay it off in full at the end of the month to not owe interest. But that can be a benefit of using credit cards as well.
Yeah, that's a really good point. I think it's that these credit card companies essentially have insurance that makes it easier for them to if you have fraud on a credit card, that is kind of no skin off their nose to take care of that for you. Is that right?
Yeah, I mean, they kind of see it, I think, as the price of business, that there's going to be a certain amount of fraud. And I know they do things with merchants to try to, reduce the amount of that's happening. But yeah, I think they see it sort of as the cost of business. And so, but it's a benefit to you that, you can pay securely. You don't have to carry around cash with you. You're not exposing your checking account while being able to, make purchases online elsewhere in the world.
Yeah, definitely. So I guess as we kind of close out this episode, is there maybe any encouragement or motivation that you could share with our audience just for their long-term financial health in this realm?
Yeah, as we've said this whole time, and you've probably been exposed to this if you're exposed to any sort of financial media, credit scores. They're important, but I would emphasize this is just one part of your broader financial picture. Thinking about your income, thinking about your spending, thinking about how much you're able to save for the future, your financial goals. This is just one piece of the puzzle. So sometimes, I have chatted with people before who are so focused on their credit, they've kind of lost sight of the bigger picture. So again, we've mentioned this throughout. You don't necessarily have to check your credit score every day. Check it every few months. In the meantime, focus on the other parts of your financial life. Do you have a spending and savings plan that you're sticking to? Are you finding ways to earn new income? Are you saving and investing in a way that meets your goals? A credit score is part of this financial picture, but it's just one piece of the broader puzzle.
Yeah. Well, thank you again so much for joining us today. Anything that we've talked about, and as well as maybe some things we haven't talked about, check out the link to this episode or the resources on this episode, because we will link them all there. Thank you, Adam, for sharing your time and expertise with us. I appreciate you coming on.
Terrific. Thanks so much, Nikita.
Thank you for joining us on the Third Decade Podcast. Remember, building your financial future isn't just about dollars and cents. It's about empowering yourself to live the life you want. If today's episode gave you new insights or inspired you to take action, we'd love for you to share it with someone who could benefit. Together, we can turn financial uncertainty into opportunity. Until next time, let's continue to embrace the journey ahead and take control of your financial future.